Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short. For everyone. My name is Alex Cho, and today I'm just going to go ahead and talk about my most favorite technology stock of 2011. So without any further delay, let's go ahead and review the stock. The name of the stock is Dang Dang, ticker symbol is DANG. It's traded on the New York Stock Exchange. And pretty much I really like this company mainly because it caters directly with the Chinese market and by using the internet. The biggest advantage of the internet is that you don't have to open up physical stores, yet you get just as much exposure. Now, that's a huge advantage because in China, real estate is ridiculously expensive and storefronts therefore are extremely expensive. So if people can just buy from a warehouse, that saves them so much money. And the aspiring class, which is basically the emerging middle class in China, really like products that they can buy at a much cheaper price. And companies that sell products online are able to do just that. Another thing that I do want to point out is that Ding Dang has a relatively low market capitalization based on the potential returns that you could possibly get. Now I just want to go ahead and review some key statistics. The company's market capitalization sits somewhere around, I believe, $1.8 billion. And it's pretty much just like Amazon except in China. Now the biggest advantage Ding Ding probably has is the Chinese government. More likely, I'm more than certain that the Chinese government will cater to Ding Ding rather than Amazon if Amazon were to ever seriously try to compete in the Chinese market. Now, my main point here is that, judging by what I see with Google in China, you'll probably see something like that happen against Amazon, and that in turn will most likely benefit Ding Ding. Now, if I were to say some statistics, the company's earnings have actually doubled. 1-year earnings per share growth rate is at 100%. And if you keep on getting that type of growth coming out of China, or even better, compounded, maybe in 10 years you'll probably see a company that makes just as much revenue as Amazon.com. Now I'm just going to go ahead and tell you guys that this company makes around, give or take, 17 million net income. That was their yearly performance for 2009. In 2010, I believe they had twice that, and pretty much it's not like the revenues and the net income are enormous, but they're starting to get there. Now, likewise, let's go ahead and examine Amazon. Amazon's market capitalization is 80 billion, and their earnings, basically, their earnings are very high. I mean, Amazon itself right now earns somewhere around, give or take, $1.1 billion. So that's a lot of money. And the growth rate is extraordinary with Amazon. And likewise, we'll probably see something like that with Ding Ding as well. Even now, Amazon is growing at a ridiculous pace. And if Ding Ding continues to compound this 100% a year revenue increase, or even more at times, and clock those huge net income gains, then like I'm saying, I could easily see Ding Ding trading somewhere anywhere from $50 to $150 per share in the next 2 to 3 years. Anyway, that does it for me for today for my favorite tech pick of 2011. Yes, I know it's not exactly a technology company, but it is on the internet, and it is an e-commerce slash technology slash retail company. But give or take, I'd still consider it technology. And yeah, this is just my favorite pick for 2011. Anyway, take care, folks, and I'll have more for you guys in the coming weeks and months ahead. If you guys want to use the same charting software that I use, please be sure to check out the link below. And yeah, just subscribe if you guys want more of this. I'll have more for you guys in the coming weeks and months ahead. Take care.